Good morning, guys. We are back. We're live on the channel for the first time in almost a week now. Max looks like he's sitting down today, and he's covered up that luscious hair. So I don't know why he does that. Look at that, guys. Look at that, like a helmet. So hopefully you guys are all well. Had a good weekend, ate some good food, gained 9 pounds on my trip. I was just telling Max that. I'm working that off right now. And for anyone that's in the Midwest, it has been awful the last couple of days. So if you're in the Midwest like me, you know it was 85 yesterday, and I woke up to 29 degrees today. So it's been great. Yeah, otherwise, let's look at the charts. Guess what, guys? We are still range bound. We're still right where we left a week ago. So that's always nice. Max, I'm going to share the screen. Anything to add before we kick it off? He's got nothing. He's actually quitting a habit. We're gonna air out Max's dirty laundry. Max is quitting.
Let's do it. Say it here, so it has to be done. Quitting.
Yeah. So in America, we make fun of people who vape. We basically just say that's the equivalent to him just banging dudes. So Max is gonna quit banging dudes, save some money, save his lungs, and good to go. And if you bang dudes at home, hey man, that wasn't meant to be a dig by any means. Might as well start the new channel off by getting canceled the first episode back from vacation. All right, guys. Sorry. All jokes aside, let's keep it somewhat professional. Yeah, the boxes really haven't moved much. You guys should recognize these by now. We will talk XRP, Ethereum, and DXY as well after Max does his order flow. So if you're into those, stick around. They'll be labeled as chapters as well after the show airs. But you've had support here, resistance here. Where are we at? We're at resistance. We have taken the high here, and we are at a pretty important inflection point in the market because, you know, I'm a believer that if we start giving up, I believe it was the weekly open this week or previous week open, they're all kind of bunched together. Yeah, right around 28K here. So this current previous week open and the current weekly open kind of form this little like zone of about $200. I would want to see that holding as support. It does line up nicely as well, if I recall, with the current weekly pivots just beneath it. So you can see how this is all kind of culminating into support that needs to hold for at least immediate upside, right? And you can also see there's your developing range. So coming into that support could offer up a potential day trade as we approach it. All that said, though, on the high time frames, nothing has changed until we actually formally start breaking down below 26,724. You know, I'm still looking at this as a sideways market, and the, you know, pressure to the upside is going to be on. However, if you're going to put on risk for further upside, you have to be kind of conservative where you're doing so. You need to have good invalidation, and I always recommend anytime you're this extended in a rally from, you know, down here, that if you get the opportunity to lock in some gains early, you do so. It doesn't mean you have to close the whole trade, but, you know, trading this as a range has been the best trade. And we talked about this as we approached it, getting above the level. Wanted to see it support, resistance, support, resistance, support, resistance. And then you have what's called a partial decline here. But if you pulled the range in terms of the breakout from 25K, where you can see we never returned back below that level, tracking our volume profile, it was just, in fact, a rotation of the range. And you've done two things, you know, locally. So you could very easily chalk this up to, you know, something like this. You could just say in terms of a trend, we've come into the 886 in 1-to-1 of our move just beneath the range low. You got a really good reaction sweeping this level right here, giving you the invalidation to probably trade this all the way back up to the value area high or the 6M2 at 28,563. There's also a weekly breaker up there we'll talk about. And since you've made that move off the low into the new high, you can also do the exact same. So you could have just traded this from a trend-based Fibonacci standpoint, from the 1-to-1 expansion below the range back up to the range high, and then seeing that you have the local gold pocket right here. And I'll get rid of the 886 for this one. I just don't think it's necessary. So basically letting us know that if we do break 28,726.50 or this local gold pocket right around 29K, call it whatever you'd like, in this region, if you get that continuation, the 1-to-1 is your next target. And it does come in right at our blue box, Very, very nice indeed. You love to see it. However, ranges can go on much longer than people think. So the better trade in this region of the chart is never to be putting on risk for a long. It's to start looking to see if you can't trade this back into something like your point of control, which you've obviously been bouncing from, along with the weekly open. Those weekly pivots are here. So you know you're coming into that somewhat intermediate support that is going to be important if you want to see this range break to the upside. Otherwise, I would be looking for a rotation below these levels. And that means coming all the way back down to the value area low of our range, So that's how I see it, very sideways, very easy to navigate. You lose 28K on, probably even like a 4-hour closing basis. You're going to be looking down to, 27.3. I would likely target this low at 27.181. I'd start looking for this box down here. And that is derived off of some daily levels that I've put on the chart, plus our yearly pivot. Okay. So when we look at this here, you can see there's your yearly pivot. Once claimed, it's been great support. Still need to hold on to that. But you can see right here, this little daily guy has been swept once, twice, 3 times at 26,901. So for me, if this level is not swung fail and doesn't become, support, like a move like so, right? A move like so. If you don't get that, then yeah, I'm looking for these levels to be tested again. And that's where I'm willing to put on risk yet again for at least a bounce, even if it may just be a pit stop, because I do think if we come back down here again at this point, there's a chance you do make that trip down to this 25 and 24.7K level. And that's really the big area, as we've talked about. For me, main reason being is if you go out to like a weekly time frame here, you can see that we had not closed beneath or above this level for quite some time, all the way back. The last time we were actually closing above it was the first week of June. So that's what I would be viewing as a pretty big sign of weakness. And those positions I have from like 16.6 would start to, I wouldn't say they'd become in question because you're so far away still, but this rally, barring a bear trap at 22,810 and 22,407, the 6M1 and the September high, where your Q1 NPOC and March NPOC reside, does kind of make me question it. You would need to see an aggressive move and reclaim of support because living below 24/7 is no bueno. But if we remain above support at 26,724, I do look at this as a sideways market. I'm not going to be overly bullish or bearish. I am going to look for longs in this region until the longs are no longer good. And I'm going to look for shorts up here as far as intraday trades. But for me, there's been no reason that I'd be holding a swing short just yet. I've taken some shorts out of this region. However, they've all been closed for profits inside of the range locally. So that may end up being a tactful error on my part, but we'll see. But yeah, you can see this is a pretty undecided market. Like, look at the size of these weekly candles. And if we cruise on out to the monthly, you can see that, you are getting that pullback here into April. And when you look at it like this is really not that bad. Not a huge pullback when you look at a candle like this. So if we lose 26.7, again, where do we look to? Well, you could look all the way back to the February high here at the prior wick low at 25,222 that came in May. And then you've got 24/7 right here that we just pointed out. So that's where that blue box is derived. So living below that on material close, like a weekly to a monthly candle, that's where this rally starts to look kind of poor. And we're probably coming back down into at least take the February low. And I would imagine 20,688 gets tagged as well. And another supporting factor of why 24/7 is just so important, your quarterly pivot, which I'm flashing on the screen right now. I know it's probably hard to see. Let's go out to the weekly, is right here. Got to have that. Got to have this as support if reached. Don't want to be living below that, because then you're living below all major averages. You're living below the structural range high here at 25K and 24/7. You're below the pivot. You're back inside the range, and we really start looking for probably 19 and 20K over time, in my opinion. So yeah, that's really it. That's a really high time frame rundown. I'm gonna cut myself off here so I can turn it over to Max. There are 19 of you in here, so thank you guys for being here on a cold Wednesday morning. Do me a favor, hit the like button if you are so inclined. Max, you are up.
Share my screen. Okie dokie. So yeah, range bound as Fook. Right now we've got overall in this region, there's been a lot of market selling going on. That's why we've got this, bullish divergence effectively. Open interest is all over the shop. Really, it creates a challenge with it a little bit when you're trying to read the CVD divergence. But taking note of the bullish divergence that we've got going on throughout this range, it is there. But on the other side of that, there's clearly a lot of selling going on up here. It's a good time to sell. It's just whether these positions that are, you could argue, being absorbed here are doing a, it's who's going to give up first? Is it the selling, or is it the person that's collecting these longs that are closing out effectively? Because I don't believe that it is a lot of shorts coming into the market and getting trapped. However, if we zoom into price, actually, I want to say one thing. The Twin called it out the other day, and for all of you that are not in the group, SFPs have been pretty much the only trade that you need to trade this right now. Every single good trade that you could expect has been an SFP. You've got an SFP here, SFP here, SFP here. If I zoom in, you can see it. You've got another SFP here at the low here. You had an SFP of this low over here. Early this morning, another SFP. A little bit later, just as you guys have all woken up, another SFP. Really been the only trade you need. I've said it for time. I've said it for so long. SFPs are the best trade in this market. You really don't need another trade in your arsenal enable to make money in this market. It's the only trade that you really need. It's the best trade. Right now, we have taken the Asia low. The Asia low being this, and we've also taken these two lows. Now, the issue that we've got here, in order for us to really push in this market now, I did say that I wanted the price to come back below the daily open, which we've got here. It's not come up, it's here. So I did want price to come back. But what I need to see in this price area is, you can see here as we've come into this level, you've had huge selling imbalances. And if you look at the actual figures themselves, it's heavily stacked in favor of the short side, effectively. 2.9 million there, 2.8 million there, 3 million, 1.6, 2.3. Huge amount of selling. And in this region, it's clearly not been able to push price too far. So is that bullish or bearish? Well, the fact that there's a lot of selling going on, that is bearish. But the fact that they've not really moved price, it's clearly been absorbed. And you can tell that you've had positions changing hands somewhat, and you've definitely had shorts enter in this candle here, and they're all in this section here. And then same thing happened here. Positions changing hands and some shorts entered. You even had a finished auction. But what I wanted to really see was a lot more buying then come in, because whoever's been absorbing this selling that's gone on right here, right now, really needs to then show his hand and push price. Because if not, whoever is selling and selling into this buyer can continue. And if he's not going to show his hand, the market of the retail aren't going to change their perspective of it, and they're not going to stop buying here. So this is an area that I was looking to take longs in, but until I really see an oomph, I guess, from the buyers, you've really got to sit on the sidelines and wait. So where can we wait for price to come to if it's not going to bounce here? Because right now I'm waiting for either really strong buying to come in. I want to see stacked imbalances, maybe more volume, maybe more volume. You'd probably see the same delta, if not more, but you'd want to see more volume coming in and in a move upwards other than just this. Where would I be looking to? To be honest with you, you've either got to come down to the weekly pivot, which is down here at 28k, that region which Magic mentioned, or you're going to come down a touch lower to the golden pocket. I don't know why I'm so zoomed out here, but you've got a gold pocket at 27,800. You've got a daily level there. You've also got the quarter one low from 2021. So it's a region for me where I am looking to take a trade if you're not going to come and hold some of, if not, you're going to come down much further. But yeah, it's either the weekly pivot or this gold pocket is the areas that I'm looking at if we're not going to bounce here. But if we do start to bounce and we do start to get that the buyer that's absorbing here showing its hand, you've going to have a lot of trap shorts. You're going to have all these guys that have entered here and all these guys that have entered in this candle here, all trapped. And then what can we do? Well, you can look to where the stop loss is going to be. First take profit will have to be the VWAP, to be honest with you. But then if it gets past that, it's got quite the move to ahead of it. The reason being is, you've got these two highs here. However, this one didn't take this high, and this high actually didn't take this high. So you've got like a series of highs effectively that could easily, trigger one another. You just need to get into trade in order to get into that position. You can't be taking trades up there in order to see those highs get taken. But if we can get in a trade down here, take profit one and initially quite fast as we do. But then I'd really let the rest kind of ride and try and get another SFP of these highs, because really the SFPs have been the one. But yeah, really have to wait and see how price reacts down here, whether we are going to have buyers coming in, which we don't really have right now. So sellers are in control, so be patient. But as soon as you do see a sign of strength in the buyers, it could be the opportunity to get in. Right now, I would wait for us to get above the daily open just to be safe again. But yeah, sellers are in control right now, so you've got to be patient. I'm done, Magic. We've got no single prints to talk about. There's pretty much nothing to go over. No single prints. The single print that we had early today got closed out pretty quickly in the when we dropped down. In this region on the chart up here, I don't know why I was talking like that then. In this region chart up here, we did have if we go to LRA, you can see you had open interest slightly climbing, as well as if I go over here, you can see the delta was kind of going up as well. I say that it was pretty flat, but that's what causes moves like this when you come and take out the longs, which I would say there was more of looking at price before coming up and taking out the shorts on the top side before then reversing and doing the move that it wanted to do. So yeah, now I'm done. But yeah, I've not really got anything to say, Magic. Where are you?
Are you sure you're done?
I think I'm done.
All right. We're going to cover the DXY next. That's great. Right at 18 minutes. Well done. Appreciate you. Just updating my timestamps for you guys at home. And I'll share my screen and we'll knock that out. So the DXY at a really important level. It's a really important time for that chart in general, and the asset, if you will, because one could say that this is either breaking down bearishly or it's at just absolutely key levels. So if you guys watched me on Investing Bros, we talked about this. Oh, wow. I didn't even see that the quarterly coming in for Q2 is like our rejection point here. Very cool. Yeah, so if you recall, blue box of either peace and prosperity or death and despair, however you want to look at it, you can see that over time, this has been very key resistance right here. Again, offering up some chop, resistance, go to the left, again right here, big bounce, big rejection, support, and resistance, etc., etc. There's tons of history on this chart to show why we like that level and why it's so important. You look at the monthly. This is a 7-year range that you spent between these 12M levels. So you can see that I've got one here and one here and then one here to make out the middle of the channel. And this has been a really great range to trade if you were bullish on this asset. Good accumulation here after the move out of the lows, right? So the dollar was accumulating, came into a massive, we'll call it a blow off top here, into this pattern that we covered back in the summer on Debate Crypto with Bill Noble, actually, of all people. We were talking about that. So you really don't want to see 102.21 lost if you're bullish on the dollar. However, you are coming into support. So again, there was a box that I had lit right here. You can see that this is where I've got support outlined. And you can see when we look left that we have been swing failing these local lows over here quite a bit. So if you were just to mark them out just for, grins, you can see 101.64, and you can see right here, you can see these are your lows that you've been swinging into over time. So we could realistically probably adjust this box to here if we were looking for more of a wick basis. And we could say that, if this area is lost, we obviously have this local low that could be swept in that case. However, I would really favor a move down to like 96.5 and 96 at that time. So this is a make or break area on the chart for the dollar. So I wouldn't get too bearish where we are because this has historically been support. So again, we talked about this, I think last week, where we said this could put in a range here. And if it does, the resolution of either this 2017 and 2016 high or these local, lows here, these breakers that have been serving as support, are really going to be telling for the next move, either down on the dollar, showing that weakness that maybe people are moving away from it as the reserve currency, or maybe they flood back to it, because most of the time when reserve currencies do come out, they do have their heyday for a few years, it seems like, but oftentimes the dollar ends up being king overall. So to lose some dollar dominance, I believe we're sitting at like 61% of the market right now. If it went down to the 50s, that would be what gets you this move down into the range, right? However, new currencies, there's a lot of challenges there. So you could still see a move out of this region. So while we're bouncing between these two boxes, I would remain fairly neutral. And one thing to note is, where's the dollar at right now? We're at support, right? Support eventually does break, of course. So we can't say that this always has to pan out, but dollar's at support, Bitcoin's at resistance, right? So if you're looking for a hedge in the market and you're seeing dollar strength off of these levels, and Bitcoin is showing weakness, like losing that yearly pivot or breaking below 28K, right? One would think, you probably don't want to be hedged long and exposed long from the wrong area of the chart, correct? You'd want to be either sitting in cash because the dollar is going to go up, risk on is going to come down a little bit, and waiting for lower levels when it's more asymmetrical, as I think Forrest likes to say, where the risk to reward is just higher for you. So that's the idea behind it. So for right now, the dollar at a pretty critical area on the chart, but it is support. So be careful getting too bearish in this region, because it can still push back up here, back into that 103, 103.82 as far as a resistance, and anything above that, and we still do have some levels there. Now, if the dollar is breaking down from here, this is a pretty big sign of weakness, because you've left the quarterly pivot untapped from last quarter and the 6M1 up here. So two big mean reversions that often get hit. If they're not hit, a lot of times the asset trends the opposite direction, which we can say is probably taking place now. But if it breaks down from this level even further, there's really no reason to think that it won't trend a little bit harder. So let's actually look and see if the TA is supporting that. I know this is a really ugly chart. We're going to go down daily. And yeah, look at that. So there's your S3 from that quarter one pivot up here at 106.942, all the way down at 96.5. Now, obviously, the more relevant one is this one at 98, but I just happen to think that, well, yeah, the S1, yeah, I just don't see us not getting the 96.5 if we break below this box. But again, you got to remember where you are on the chart. This technically would be a higher low still, and this is support until it's not, and even if we lose this box, you can always come down, swing, fail these lows. And Forex, they love to do that and then run the range back, right? So just be careful where we are, So again, Bitcoin at resistance, DXY at support. It would be much more wise to be hedged short at resistance on Bitcoin right now, even if you get stopped out of it. The point being is your risk is just much lower. So that's how I would view things as of right now. That doesn't mean the Bitcoin rally is over. We've gone over those invalidations. That's all the way down at 24/7 for me. Living below that level is where I start to really change my mind on this overall move up. So until that happens, this is range bound. And if you're looking for intraday or intra-week positions, it would be wise to be tactful on where it is, because even a mean reversion back to 24/7 from where we are at 28K is pretty painful to watch. And if you're playing with leverage, it can pretty much be, lights out. So we'll see what happens over the coming days, see if that dollar reacts to the news where, people seem to be moving away from it, trying to establish new currencies. inside of the market, which is not something that, you know, is uncommon since like 1995. That's happened 4 other times. You can see how it's gone for all of them. So, you know, but inside of that, where that does take place is where you get moves like this, right? And we see that happening, and the dollar reacts accordingly, right? So it's going to ebb and flow with the market. And yeah, just trade the chart for what it is, guys, and be safe. Let's see. We're going to talk Ethereum next, and I just want to make sure that I'm marking these as we go. So give me just a second here. We're going to say 2530 is Ethereum, and then we'll talk XRP, and we'll probably be done for the day, right? So, all right, Ethereum has come into a major zone for me. So there's 2 major pivots up here. You have the 6M2 for 2022 at 1,946. And then you had the 12M1, which is your yearly pivot. That's the same zone that we looked at on Bitcoin. We still have not tapped it, but, you know, 1946.90 up to 1988.70. And you can see right here, that is where you are getting rejected. So the levels are playing very, very nicely right now. So this is no place to be looking for a long. As I said on Sin City yesterday and on Investing Bros today, that these are profit-taking areas. Doesn't mean you have to close your whole position. Doesn't mean the rally is over. It just means that, you know, be smart. And I like to take profits incrementally. There's a whole section on that in the classroom of our Discord where I talk about how you can set yourself up for success on swing trades by layering your exits and then knowing where your invalidation is. And for Ethereum, it's very simple. It's much like Bitcoin. I do want to see us living above this July high here at 1785. That is your change of behavior, so to speak. And that is the level that I'd be looking to, that if we start closing below it and living there, well, you know, you probably have that $110 drop down to 1677, but then over time, I think you come all the way back down to that 1418 level, and things don't look quite as nice there. You know, Ethereum, if we're looking at this, 2K is a big resistance just from an average standpoint. Plus you have, you know, $100 above is the quarter one low. So really a zone here. And you can see this was also support and resistance for quite some time here in this region of the chart, which lines up where very nicely at 1785, giving us that inflection point. So some very interesting levels. Still looking to see 1,988.70 hit on Ethereum USD price on Bybit. That is a major, major target for me. And then you really should just be marking out your local high here from August, the August high, or the overall high of this range at 2031. If we hit 1988, there's a decent sized chance that you will do something like this. Come on over to here and actually sweep the local high here. So we'll just mark this our local high. And what we should be doing is just setting alerts for these levels. They're not something that I think you want to preset for. However, you definitely want to have a plan, right? And what I mean by that is, you know, these are tradable levels. These are areas that you're going to get reactions and give you invalidation. And so if price does push above this local high, maybe even into the quarter one low, and then the bears reclaim the range high, you start looking to short this back down, maybe even to 1785. And that's a nice $250 win for you right there. If you're that type of a trader, you know, that's the plans you can start to lay out. You may not get to execute on those because they may not present the trade. But it never hurts to have them in advance, right? So, you know, long term, you know, what are my Ethereum targets? I think 2,600 is a great place to be looking at on Ethereum. You can also see it's your 6M2 here, and you've just got some local levels that you've been working off of, I believe, here as well. So if Bitcoin's going to push higher than the 29K zone and not see a major rejection back into that sub 24.7K, same with Ethereum, living above 1785 over time, maybe putting in some form of a structure up here. I don't know what the volume necessarily looks like over here. Let's see. Oh, that's not going to do me any good. I need to update this chart. Yeah, you can see that this is that 2,600 value area low, but living below that quarterly low is about where you could say price broke down. So I'm going to go ahead and do that here. We can see that on the daily. Look at that, how clean that is on the quarterly low there on the rejection. We'll extend that to the right. I know this chart is getting extra messy. And yeah, you can see your local high, your value area high up here, and that July high coming in here. So you've got a very nice low volume area here. And a lot of times price, people will say things like, well, price will just move through this area and go straight to resistance, which that is essentially the high volume node right here at the 6M2. But a lot of times price will come up here and actually start filling this out and living up here and ranging just to fill in this, gap of volume. So you can see that right now living above that July high at 1785 allows us to fill this range out more. So that's what I'd be looking for. Anything underneath this, and well, yeah, you're looking all the way back down to that point of control coming in. Where's this at? 1568. I'm gonna get rid of these. That's no longer relevant. 1568, and it looks like that's going to be pretty close to a gold pocket. All right, good. We're not in log. Yeah, look at that. There's your gold pocket as well, right on the point of control. So you lose 1785. I'm really, while I've got 1677 on my radar, and there's a nice low that could be swept into that resistance, which is very good support and resistance here as a breaker level. However, I can't help but, point my attention at 1587 down to 1568 at that gold pocket and the POC of the range, which is pretty close to shifting up here around 1635, but it has not. So that's where I'd be targeting if this is a formal rejection. If we don't see higher and we start breaking below this level. So that's all I've got on Ethereum, guys. Again, just like Bitcoin, the levels are very well defined. This is a place where you can definitely scale back on some risk and feel good about it, as you did reclaim the prior all-time high. Also, your merged value area low from ATAS. Those were USDT numbers because they had the most history on Binance USDT pair, but I trade USD, so I just transposed them over, and I like this quite a bit. So yeah, that is Ethereum. How far along are we on ETH? 31:45. We'll call 32 minutes. We're going to cover XRP next. Everybody's here to see XRP, especially Max. He's basically an XRP maxi at this point. He's over there dancing off camera. You guys can't even see him. DCF says if 100 holds on the DXY, crypto is not going to be having a good time in his opinion. And you're not wrong. At resistance and the others at support as far as the DXY. So yeah, let's get up the XRP chart. And this actually, if for those that were trading it, they should be very happy with themselves if they were following the analysis here. XRP is somewhere in this list of highly speculative, altruistic shitcoins that are all going to change the world for the better. And so none of them are going to trend to zero over time. They will all moon 100x, rocket emojis, laser eyes. Where is it?
Sounds like you've done your research for once.
I finally did my research.
Sounds like you have.
I'm finally doing my research right now. If I could find it, we'll do more research together.
You're now a respectable influencer now you've done your research. So we'll listen even more.
For anyone that doesn't know, the most common thing that's ever been said to someone that doesn't believe XRP is going to moon to like these ridiculous targets is you just haven't done enough research. And I think at some point, research is it actually is a detriment to yourself because you're only seeking out things that validate your own opinions at that point. You're only getting your research from certain areas. So yeah, Max has got the fingers in. But yeah, this is the reversal pattern we've been working off of. I'm not going to go into too far detail on it. Very, very clean bat here, both from time and price. Right into the key level that I was looking for at 29 cents. So that worked out well. You've back tested it twice, giving me 2 entries. And the selling points, I took profits here on the second one. I do still have some of that position open. I should state that I haven't sold all of it, but I do make sure I get paid. And main reason being is, if you're getting into this region, even down here at like 32 cents, 45% is nothing to sneeze at. Last time I closed out at 50 cents right here. So 53%, very good. We said that if you crack 47.99 cents, we would expect to see 53 to 54.61. And that's really going to be the level that you need to hold on a closing basis, on any kind of a material closing basis. Now you're back testing the old level of resistance, which actually provided a pretty good rejection. If you look here, a nice rejection, clean move above the level on a daily time frame into resistance, closed below after sweeping the prior high right here. So this technically would be a great short setup at the top of the range, swing failing the range high, this would have to be a take profit 1 for me. And then we could just, you know, basic volume analysis. We're clearly living below the Q1 low, much like Ethereum. Overall, your range is very far away. So you really, you know, you have room to kind of, for lack of a better term, root around up here for XRP. As long as XRP is hanging on to, you know, we could just call this what it is, the January high. We'll label that. January high is going to be absolutely key for XRP here. Not to rhyme too much, but the January high is very important in this regard. And we're going to make this a nice bold line here at 43 cents. So you do want to be hanging on to this. And you can see right here that this is the range high, the value area high of your current range, but also this was important support and resistance as well when it put in its top. So I would be cautious on longs up here on XRP. You are into resistance. You've swung, fell to high. Now, eventually ranges do break, both upside and downside, right? So if we lose 47 cents, I know it's not a huge move down. It's like, what, 10, 15%, but that 43 cent zone is going to get tapped. And if lost, I would expect to see much lower. You know, I would almost expect to rotate this range in full all the way back into that yearly open at like 33 cents. And that's not good for the crypto market at that time. And DCF is probably getting his perception correct, I think, is how they're saying it in the market these days, where the dollar is doing well and crypto is getting, you know, getting San Francisco. We'll just say it that way. San Francisco is kind of the capital for violence right now. I don't know if you guys heard, I learned this on Investing Bros. Charlie Lee, the guy who helped start PayPal, was stabbed to death in San Francisco. So wild times we're living in. You would think he was in London or something. But yeah, you know, you look at your gold pocket, you know, do we really have anything there? And I don't see anything of value at that gold pocket. So I would be targeting lower. I would expect to take these lows potentially all the way over here, these guys, and move into that yearly open and some, you know, high time frame support that we've got. So yeah, that's XRP. Good above 43 cents, even better above 47 cents. If it's above 47 cents and consolidating here, it's like a flag underneath resistance. And you guys all know that the reason I am bullish on XRP is this overall setup. And my targets for XRP do range between 87 and about $1.09. So that's really the target for this, is looking much, much higher still, which effectively is a 2x in price. I don't know what's going to happen with the lawsuit. Whatever happens, happens. Don't really care. We're going to trade the chart. And the chart down here was, we get long, we make money, we wash, rinse, and repeat. So that is XRP. Don't really have anything else I'm going to cover. Well, you know what? We'll look at Matic, because we were having a little bit of a Matic discussion in the chat. I'm obviously short on Matic still from the fund folder. The fund folder here, where we were looking for this right here into 158, which I believe it hit like 156. Yeah, 156. I'm short from 155. So I'm just chilling, holding this short. As things, you know, develop, if we reclaim $1.22 to $1.29, start living above that level, you know, that last 20% of that short probably will get closed. But for me, you've tagged the B leg here, which is where you're bouncing from. So again, B leg of our structure, that was your target, right? And you could very easily, you know, put a box on the chart, another box. Everything's a box these days. I feel like that's what society's doing. It's just putting us all into boxes, right? There you go. So you can see this has come down, come through the level a little bit. Now it's holding a support. So you really want to see this area of the chart still holding right around $1. We'll just call it $1, guys. And that was a prior area of support and resistance as well on the high time frames. So that is Matic. So if you lose $1, I am expecting to see probably 83 cents, but realistically, I think this blue box gets it. And that coordinates are 69 to 73 cents, somewhere in that region. And over time, I think that's a pretty bad look. This would be looking like a pretty big distribution pattern, and I would still be targeting 52 cents. And that's where I'll start taking profits again on that short. But if I'm pushed out of that short again, I took profits at $1.06. So for me, I've well secured profit on it. And if price pushes me out of the position, I'm definitely not going to be upset. I'll just let my spot Matic do its thing, and I'll close that position still in profit. So that's how I'm managing that trade, just kind of chilling. No worries, not a single worry in the world. But yeah, you can see you've come up off the sell-off and pushed into the yearly pivot. And I don't think that's the gold pocket, is it? It's pretty close, but I don't think it is. How dare you put up the 886 there? Yeah, not even close. Yeah, gold pocket's up. Yeah, that's why he's looking for 133. He's looking for that gold pocket. So if you get a rogue wick up there, it could definitely happen. Maybe take this local high at 130. Not out of the question by any means. Let's look at the weekly. It's certainly trying to put in a bottom here. We'll see if we get it. We shall see. But yeah, definitely needs to get back above 129 and live there. If it does that, then a re-challenge of the highs is likely coming. I think 147 is on the table. Monthly wise, that is not a good candle. That's not the worst candle I've ever seen, but it's not a good candle either. So, all right, guys, I'm going to go ahead and cut it off right there. And yeah, 40 minutes. Thank you guys for watching. Thank you guys for all the likes, assuming that you guys hit them. If you have any questions, as always, leave a comment down below, like the stream, follow, all that jazz. And Max, now is your time. QR code, please. If anybody has any interest in our services, obviously you can go to leadingcrypto.io or scan this lovely QR code. It will take you there, as my assistant over here has put up on the screen. And you guys can check out what we have to offer there. It's primarily educational content. Then there are multiple live streams a week. I think Max just did his live trading session with just Twin Branch in there. They were chatting a little bit, but he does the New York live and goes through volume and order flow for those that can't attend. And usually they're recorded and put in the live recording section afterwards. So that's it. Thank you guys. Have a good Wednesday. Trade safe. And we'll catch you in the next